In Sydney, members of a Senate committee have been hearing from some of the banking sector's top guns, including RBA Governor Glenn Stevens. Finance correspondent Philip Lasker has been at the hearing all morning and he joins me now. So, Phil, who have we heard from so far?
Well, as you mentioned, that top gun, Reserve Bank Governor Glenn Stevens, we've also heard from some Treasury officials who were defending the government's measures, but actually, Glenn Stevens, the banks would be very pleased with what he said today. Most of what he had to say supported their case. He said clearly that the cost of funds for banks had gone up. He said that the current interest rate and the movement of interest rates beyond the cash rate was fair enough, and interest rates, home mortgage rates, are pretty much where they expect them to be in the economy at the moment. He said the banking sector is more competitive now than it was in the 90s, that the market share of the major banks is falling in recent times from that huge 90%, so that's moving in the right direction. He said bank profitability, most people look at bank profitability as a way of judging the banks. He's saying that's too simplistic, and he also said that ATM fees had fallen and that to regulate them further might risk reducing the number of ATMs around the country, because the independent operators might regard that as unprofitable. And exit fees do reflect some genuine costs from banks. But he spent a lot of time talking about government guarantees and the extension of government guarantees, saying that governments need to be very careful about extending their guarantees because it exposed taxpayers to more risk. And this is what he had to say about that particular topic.
It seems that the taxpayer is being asked to shoulder more risk, one way or another, in order to facilitate the provision of private finance. Now, whether that's a good idea and in which areas and to what extent it's a good idea, and if it is, how much might be charged for that public support, is, of course, for governments and legislatures to determine.
Phil, is there a sense there that this could be the start of a new order in the banking sector?
Well, I think if you're expecting a banking revolution, there's not going to be any difference there. Some people have said that whilst these new measures may make it easier for consumers to change banks, they too do put some hurdles in place for the smaller players. So some people are worried it's just going to reinforce the position of the larger players and put smaller players at a disadvantage, like extending the bank guarantee, for example. Those without a bank guarantee may face a significant hurdle, and exit fees, for example, are an important way of the smaller players, are used by the smaller players to actually recoup some costs so that they can be more competitive in other ways, like interest rates.
Phil, thank you.
Thanks, Ros.